Good day, fellow investors. Sodexo stock is down, but it is a very interesting stock, especially for those looking for good, stable and slightly growing dividends. The stock is down significantly as the exuberance changed a little bit growth has been going down. They've made a Ph.D. spin, so they are returning value to shareholders there, but that's still just 2 billion, that's not a 50-60% decline. If we look a little bit at Sodexo numbers, still growing, but not at 6-7% as expected, organic growth 3%. Okay, the guidance has been lowered a little bit, the profits has been lowered a little bit, it is what it is, but the company is still profitable. They are still bringing all the food to wherever they have to bring it. 80 million consumers served daily, so probably many of you that watch this video are also served by Sodexo on a daily basis at your workplace, likely. They have lowered a little bit the organic growth guidance. Okay, when that returns, the stock will rebound again, but everything still looks good. The profits are good. If we look at what the business does, food services, cafeterias, restaurants, catering services, schools, universities, hospitals, corporate, blah, 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 meal preparation, facilities management, employee benefits and rewards, even if they have spun off Ph.D., which was doing that. So the majority company, the family that owns and founded the share, has bought back 100 million euros to add to their position, so that's a positive. And why is the stock down, which is everyone's question? Well, the growth guidance was slashed, a little bit cut in the operating margins, weakness, and then if a stock doesn't go up, people sell it, because if it doesn't go up, why hold it? And then you have such a sale. But all in all, slow and steady grower there. Of course, this is the pandemic, but you can see that the trend is there. Sometimes they grow a little bit slow, then they pick up slow, but that's, I think, the nature of the business. It is pretty positive when it comes to that profitability. There were some issues here, discontinued operations that lower just this, but everything looks stable. They have done some acquisitions here and there, they have divested Ph.D. as a dividend in kind, I think, but okay, focused on dividends there. This was the extra dividend from selling something, but the dividends are there, have been there for a long time, so you can be relatively sure about that. No more special interim dividends, but still 5% yield. And the key is to buy these stable, good businesses when the market is pessimistic, and then when the stock goes up, you again see how it fits you. Slow and steady company, for me, it's perhaps a little bit too slow and steady to dig my teeth in. 5% yield, 3% growth, 7-8%. I'm looking always for above 10%. But if there are among you people with good dividend taste for something like this that you can likely retire on over the long term, this is something interesting. Thanks for watching. I'll see you in the next video.